What's going on YouTube? Welcome to the Credit Plug channel. So in today's video, I'm gonna be breaking down how to build business credit in 2022. Now it's completely different from several years ago, 2016, 17, where there weren't that many accounts that reported to business credit. In 2022, there's a lot of different accounts that report to business credit. Now, the first thing you're gonna wanna do, let's say you're starting a brand new business, you're going to want to figure out an address where your business is going to be located, because that actually will have an impact if your ultimate goal for your business is to acquire funding down the road, because certain institutions are going to be more readily available depending on where your business is located and where that financial institution's geographic footprint is. You know, the areas where that financial institution or bank or credit union actually serves customers. So figure out your address. After that, you're going to want to go to the Secretary of State, do your articles of organization, and then you're going to want to immediately go to the IRS website, get your EIN, your employer identification number. After that, what you're going to want to do is open up a bank account. Yeah, so you're going to want to have multiple bank accounts eventually to build multiple funding opportunities down the road. So you could just start off with one bank account, but I would recommend, going with like a large institution, a big bank, Chase, Bank of America, where, it's going to be accessible throughout the country. Then you also might want to consider some regional banks, credit unions, mid-sized banks, and so forth. And then after you open up your business checking account, what you want to do is get set up with a payroll provider. And I know a lot of you might be wondering, like, what do I need a payroll provider for? This comes into play when you're trying to get funding and you need like proof of income, or even if you are self-employed and you're applying for personal credit products that require, proof of income or pay stubs. So you want to get set up with like an ADP, a Paychex, or even maybe a Gusto. You also are going to want an accounting software. Accounting softwares are important because it organizes all of your financial information. This comes into play when you're trying to get bigger loans, lines of credit from the banks, because they're going to want to see balance sheets, they're going to want to see financials, expenses, stuff like that. So having accounting software is going to better organize all of your business information. Another thing that you want to do is have a way to accept payments. So what you can do is get set up with a merchant account, or what I also recommend, in addition to that, you could have, for example, a Stripe, a Square, or PayPal. From my experience, there isn't one solution that kind of, solves all of the issues when it comes to accepting payments. And depending on your customers, some customers might prefer different ways of paying. So like I said, you have, Bill.com for invoices, you have Melio payments, Stripe for credit cards, Square for invoices. So I would recommend at a minimum, get set up with a Stripe account, get set up with a Square account. PayPal, I would say that's optional. I'm not a big fan of PayPal, but I know a lot of people do use them. There's also, like I said, Bill.com. And so these are ways for you to send and receive money. And that's going to be important because that's going to be the transactional data under your business is going to be very important when it comes to getting loans, lines of credit, right? Lenders are going to want to see what type of income, what type of transactions your business has. So you want to be set up, you want your business to be set up to be able to handle these types of transactions, sending and receiving money. When you have, let's say your PayPal, your Stripe, your Square, they all have revenue-based loans, right, that you can get in working capital. So once you start building up, transactions and start transacting, sending out invoices, you can use that data. It's not going to be based on your personal credit, but you could use that transactional data to get business loans from these different non-bank institutions. And then, like I said, if you have good personal credit, you can go to American Express, Chase. Those are going to require personal guarantees. So you still need to have, I would say, like a 680, 700 or higher to really qualify for like the Amex business cards, the Chase, Citibank, things like that, Bank of America. You're still going to need to have pretty good personal credit. Now, after you've set all this up, you're going to want to start building starter business credit. Now, in 2022, there are a ton of different ways to build credit. It's not like 5 years ago when there was just Quill, Uline, and Granger. You don't have to go that route. And I'm not even going to recommend that you get a whole bunch of net 30s. I would say just get 3 net 30 accounts. The first net 30 account that I would get is going to be the Nav Credit Builder. So Nav is basically a subscription service that will give you your 3 different business credit scores. So the Experian and Telescore, you got your Equifax Business Delinquency Indicator score, and you also have your Dun & Bradstreet Paydex. Now, don't get too caught up with Paydex. I know, people get over infatuated with that, but to be honest with you, if you're trying to eventually get lines of credit in business loans, you probably want to focus on Experian as well as Equifax, because Equifax owns what's called PayNet. Now, PayNet reports financial trades. So there's a difference. You have vendor trades and you have financial trades. Vendor trades are basically business to business, credit, right? So if you're a business, you extend net 30 terms. You're basically providing a product or service on net terms. Whereas financial trades are actually going to be, a type of lending instrument, whether that's a promissory note, whether that's a line of credit. PayNet, which is owned by Equifax, PayNet reports financial trades, so lines of credit, loans, business credit cards. That's what they specialize in. So you really want to focus on building your business credit profile if that's your goal of getting loans, lines of credit, to have accounts to report to PayNet. And I'm going to explain some of the accounts to report to PayNet. But once you start building up these net 30 vendors, right? And again, you don't have to get every single net 30 vendor out there, but I would recommend 3, right? So you're going to get the Nav Credit Builder, Business T-Shirt Club, and the CEO Creative. All 3 of those are available to brand new businesses. The Visa Mastercards that you can get as a brand new business that report to business credit, you're going to want to get the Divi Credit Builder. So any business can get the Divi Credit Builder. The Divi Credit Builder is going to report to DNB as well as Experian Business. I'm not 100% sure if they report to Equifax Business. There's also Pay Mastercard. Pay actually reports to DNB, Experian, as well as Equifax Business. Now, the only caveat with Pay is that Pay does run your personal credit. So they're going to run your personal Experian. However, you don't need a high personal credit score. You can get approved with like a 600 Experian FICO score for the Pay. Pay is going to report on all of your business credit reports. Another business Visa MasterCard that you can get is the Tilful MasterCard. Now, currently Tilful is just reporting to Experian Business, but they don't pull your personal credit, so there's no hard credit check. So look, I just gave you 3 net 30s as well as 3 Visa MasterCards that our brand new business can get. I've dropped links in the description of the video. So you could literally start your LLC today, tomorrow, and get all these accounts ASAP. There's really going to be very little restrictions in terms of getting any of these accounts. Divi, automatic. Pay, pretty much automatic. Tilful, automatic. Now, Tilful is a secured business credit card. So you do have to put down a $500 deposit, but they do report to Experian Business, and eventually they will be reporting to some of the other business credit reporting agencies. This is a brand new product, so sometimes it takes a couple cycles before they get their reporting in order. And again, you don't have to get every net 30 out there. There's a whole lot more. There's Crown Office Supplies, there's Wise Business Plans. There's a handful of different net 30s. You don't have to get all of them. You don't have to go crazy with it. If your goal is to eventually be able to, get different types of business trade vendors like the Sam's Club MasterCard, or, Dell, you have Samsung business account, Best Buy business account. You have to build up a foundation before you can move on to those steps. Now, I was talking earlier about PayNet, right? Now, the reason why PayNet is important is because certain business credit products, for example, with Truist, Citizens Bank, they do pull your PayNet. So they're looking at any past financial accounts that, you've had or you've managed. They're not looking at your Dun & Bradstreet. They're not looking at net 30s. They're looking at loans, lines of credit, and credit cards, actual financial products. So I've actually come across a handful of banks recently where they use PayNet, or they use, your business credit report as supplemental information. So you can have good personal credit, you can have income, but they are going to use business credit as a supplemental data point to evaluate you for different credit accounts. So PayNet is one of the most important ones. And I'll give you a couple accounts that 100% report to Equifax as well as PayNet. Now, number one, you have the Fuelman Mastercard, which is also under the Core Pay umbrella as well. So FleetCor actually is the umbrella company of Core Pay Mastercard as well as the Fuelman Mastercard. So both of those accounts are going to report to PayNet. You also have FNBO credit cards, First National Bank of Omaha. Those report to Equifax. Let's see what else. You also have Citizens Bank. So Citizens Bank does report to Equifax Business. And all of this information I actually pulled from my Equifax Business Credit Report. Oh yeah, Truist Business Credit Products. So business credit cards, business lines of credit, secured business loans, secured business line of credit. All the Truist business credit products report to Equifax Business. And like I said, eventually reports to PayNet. So those types of accounts are going to help you build business credit. Now, here's a little game changer I'm going to throw out for you guys. So with Truist, you can get a secured loan as well as a secured business line of credit. Of course, you do have to put up your own money, but they actually report your most recent payment on your Equifax business credit report. So for example, let's say you have, $10,000, you get a secure business line of credit, and let's say, you're using that line of credit and, you're making these payments. They actually report your last payment. So let's say you use your full $10,000 line of credit and then you immediately paid it back. It's going to report a $10,000 payment as your most recent payment. Their auto vehicle loans from Truist also report to Equifax Business. So like these types of accounts, these installment loans, these secured loans, these lines of credit and credit cards from Truist report same way at Citizens Bank. Citizens Bank credit card, Citizens Bank line of credit, business loans, they all report. SBA loans also report to Equifax Business. So there's a handful of accounts that you can get strategically that are going to report to Equifax Business, which will then help you get additional lines of credit. Now, there's another bank called First National Bank of Pennsylvania, and I recently got a business line of credit from them, and I found out that they actually pull your PayNet business credit report to evaluate you for business lines of credit. If your goal is to get financial products, lines of credit, credit cards, loans, you want to focus really on your Equifax business credit report. I know a lot of people talk about Dun and Bradstreet and so forth, but to be honest with you, in my opinion, I would say that Equifax and even Experian and Telescore for that matter is going to be more important for the loans, lines of credit. Now, should you build your DNB? Of course, but from my experience, DNB seems to be more geared for vendor trade credit. And vendor trade credit, it's great to grow and scale your business, but there are limitations because you can't always, get cash access or use it anywhere. So yeah, when you're building business credit, you got to make sure that you're doing it strategically, acquiring accounts that are actually going to help you in the long run versus, sometimes, there's business vendor credit that doesn't even report. So you might have these accounts, use them, and it's not helping you reach your goal. Anyways, that's all I wanted to cover in today's video. Until next time, take it easy, and we'll talk to you soon. Peace.